December likely in play. When do you think might be appropriate then to take that pause?
I think it'll really depend on the evolution of inflation. We just got the GDP report with inflation still in very, very modest territory, below 2%. That's where the Fed's goal is, even though the economy is still growing at 3% or so. And so I think that allows the Fed to take a pause without being too concerned that inflation is going to get out of control. But that's exactly why Clarida and Powell have said they're going to be looking very carefully at the data, because if inflation were to spike up, they'll move. But if it stays benign, they're probably going to take a pause right after the December rate hike.
Oh, I want to underscore that and cut that soundbite immediately. Former Fed Governor Randy Kroszner does think the Fed's going to take a pause because, Randy, I think that you and others are also changing your view just a little bit, really, where the Fed's heading. And it seems to me is partly because, yes, inflation maybe is just barely at 2%, not going to stay there. Big drop in stocks globally since the last meeting. Oil prices fell apart for a while. You seem to be in step with the Fed, but have you too kind of changed your sense of just what was going to be happening?
No, I was thinking that after the December rate hike, they were going to reassess because exactly as Jay Powell had said, they're very close to what they estimate as the range for the neutral rate. The neutral rate, they estimate around 2.75%, exactly as you said. After this rate hike at the end of the year, they'll be at 2.5%, so that's certainly within the range. Without a lot of inflation pressure, there's a lot of question about how aggressive they need to be. They've been very successful in being ahead of the inflation curve so far. They don't want to go too far and sort of tank the recovery. And that's really the challenge that they have. What do they need to do to make sure they don't get inflation, but they don't go so far as to make the economy turn down? That's where the big debate is over what is neutral. That's the big debate is how to interpret the data about where inflation are going.
Randy, is there enough of a debate over external factors like the tariff war, like the trade war, right? Because we know that Jay Powell has said in the past it's very difficult to be able to see if it's coming through in the economic data, and in fact there might still be a lag that we just aren't seeing at the moment. Do you think there is a risk that it's going to be short-term inflationary from these tariffs, and perhaps longer-term some sort of stagflationary impact is going to take place?
Well, so far the tariffs have not had a major impact on the U.S. economy, although trade, of course, is important globally. As a percentage of U.S. GDP, it's much smaller than for China or for many other countries. So it has an impact, but has less of an impact on the U.S. And that's one of the reasons why the Fed has not had a very direct statement about how important it is, because I don't think anyone at the Fed likes a trade war, but I think when they look at the data, at least so far, it's hard to see much of an imprint on the U.S. economy. So again, a continuing debate on what the impact of that is going to be, but so far it's had a very small impact, and even if the tariffs do go up at the beginning of 2019, they're not likely to have an enormous impact on the U.S., but they will have a pretty important impact globally.
The bigger concern, though, would be this slowdown that we're continuing to see, even in the latest numbers in the domestic housing market, I should say.
And so certainly the Fed is looking at that. They're looking at global growth, which is clearly slowing. China is slowing. Europe is slowing. Emerging markets are really quite uneven. The U.S. is probably not on track to continue to grow at 3 to 4% as it has in the last few quarters. But it's still, most forecasters would say it's still going to grow in the mid 2% range, which will still be relatively strong compared with baseline potential in the U.S. and with respect to most of the rest of the world. And so the Fed is just going to try to see where is this going to shake out? How do these different factors affect the U.S.? But the U.S. economy continues to be on a reasonably strong path.
Randy, I'm glad you brought up GDP growth here. Hop into the Bloomberg terminal one more time with me. And in our GTV library, you can see that the Atlanta Fed GDP forecast is going to come in at about 2.5% for the fourth quarter. Right. I mean, Powell, he says that the economic outlook is relatively strong, although it is slowing down. Do you agree with him that it is, quote unquote, relatively strong? And how strong can it be through 2019?
So I agree that it's relatively strong because most of the rest of the world is slowing much more rapidly than the U.S. is.
Sure.
The U.S. is growing a bit above its sort of long-term potential. I think part of that coming from some of the regulatory reforms and some of the tax reforms that have occurred. And that's another question that the Fed is struggling with. Are those reforms something that is going to provide a longer-term boost to productivity and economic growth, and so the Fed doesn't have to respond with higher rates? Or is a lot of this just sort of short-term stimulus, and so that could lead to inflation, which they have to respond to? That's still not clear. Economists often take a long time to figure out what is happening. I know the tax reforms were almost a year ago, but it is going to take a while to see what the actual impacts are in the economy. We just saw in the revision to the GDP report, slight increase in business investment. That's something that's very important for interpreting whether the tax changes last year were simple tax cuts or real reforms. If they're real reforms, we're going to see more investment.
What are your thoughts on a recession risk further into the future?
Well, there's always a recession risk that looms. There's always some sort of shock that could be out there. Certainly since I was on the Federal Reserve Board from 2006 to 2009, I never say never about anything. But at least the way the U.S. economy is evolving right now seems to be on a reasonable path for reasonable growth, not gangbusters growth and not recession. But there are shocks out there that are very hard to see. And as I mentioned, the rest of the world is slowing, and in some cases relatively rapidly, and that poses some risks for the U.S.
See, Randy, I want to ask you a couple of questions, and one has to do with the dot plots for 2019, because you said you think the Fed's going to take a pause after December hike. And there, as you know, the dots are so dispersed. You have basically 9 out of 16 who think there's at least 3 next year, and then what do we have, about 7 who think there won't be that many. If you see the Fed pausing, is this a pause that then it's going to go sort of meeting by meeting? Are they going to just not be, again, not on a preset course? Is there a chance that if the trade war gets worse and things look kind of iffy still in global markets, that the Fed could just keep pausing until they're really convinced inflation is going to stay at 2% and things are strong enough?
I think that's right. I think Powell and others have been very clear that they're going to be looking at the data. If there's something that suggests that the U.S. economy is turning down and that there's no inflation pressure, given that they're in the roughly in the range of where they consider neutral, there's no reason to be aggressive. Now, as I had said, I think the economy is going to continue to grow in the 2s over 2019. If that's the case, they're likely to have probably a couple of interest rate rises. And on those infamous dot plots, all those dots are presented equally, but they shouldn't be of equal size. The dot plot for the chairman should be a lot larger than the dot plot for everyone else.
Randy, just before we let you go, I'm curious to get your views on just the criticism that the president has been levelling at Jay Powell, right? I thought it was interesting that Jay Powell came out in his speech and really kind of confidently tackled these monetary policy issues. He proved just how powerful he is as a central banker, given that his comments really took the market as opposed to the comments that we later heard from the Bank of England, right, as well. Does it concern you that the president is levelling such criticism, or is it kind of just noise ultimately, and that the independence of the Fed and of the Fed chairman is really intact after this?
I think it's very clear that Jay and his colleagues are just working through this. They're going to do what they think is best. The president has, on a number of occasions, although been critical of where interest rates are, has said, I'm going to let them do what they think is best. And they are clearly operating on that, along that line. They are not going to change the way they approach things because of the president's criticism. They're going to do what they think is right because they think that's best for the U.S. economy and ultimately best for the president.